And in our top business story, currency exchanges across the country are reporting a rise in remittances to the UK, according to reports, after the sterling hit a 31-year low, resulting in a loss of up to 18% of its value. Remittance volumes handled by the UAE exchange jumped 135% last week compared to the same week a month earlier. The company's CEO, Promoth Mangat, was quoted saying that with the GCC currencies pegged to the dollar, the weakening of the sterling has positively impacted remittances. And although uncertainties prevail around the UK's economic prospects outside of the EU, British expats are cashing in on the favourable exchange rate and remitting to their home country. It's also been reported that banks including HSBC, Goldman Sachs, Deutsche Bank and Bank of America all expect the pound to come under further pressure as traders eye Brexit-related risks. Dubai Properties has announced that the Marasi Business Bay Promenade is scheduled to be opened in November this year, coinciding with the opening of the Dubai Water Canal that's being built by the Road and Transport Authority. So far, over 10 kilometres of the 12-kilometre promenade and surrounding infrastructure has been completed to date. And once launched, the promenade will boast options for entertainment, leisure, retail and an active lifestyle. Abdullah M. Lahej, the group CEO of Dubai Properties, was quoted through a statement saying that the Business Bay landscape will be redefined with the opening of the 1 billion dirham Marasi Business Bay Promenade mixed-use destination and the Dubai Water Canal. The region's first ever purpose-built yachting destination, located along the Dubai Water Canal, is divided into three main areas: the marina, the park and the pier, and is on schedule to be completed by 2023. While Phase 1, which is made up of the marina and the park, is on schedule for delivery in Q4 2017. Also, as a part of Phase 1, the UAE's first ever water homes with pedestrian and boat access are under construction and have attracted high levels of local and international interest, according to the developer. The 50,000 square metre park area will include 16 parks with water features, play areas and interactive furniture, as well as an event space with an amphitheatre, outdoor cinema and weekly markets. The UAE's national brand value this year rose by 19% to $478 billion US. That's according to the Brand Finance 2016 Nation Brands report. The national brand value is a measure of the combined worth of the country's brands against the wider economy, and about 17% of the UAE's value is directly attributable to the benefits of companies being based in the UAE. The country has also retained its AAA brand rating, and its brand score, 85 out of 100, is almost level with the 86 recorded last year. The UAE's own brand strength, based on factors like its worldwide image and perceptions about tourism, investment, governance and security, now ranks as the world's 12th strongest nation brand. Officials stated that the UAE remains solid and an island of stability and strength, and that although regional issues weigh against it, as do trends in the oil price, there's still a very high degree of visibility of the UAE as a brand, in terms of the airlines, which carry a lot of brand recognition, as does the Expo 2020 and tourism. Large government-related entities in the GCC with important mandates are better positioned to withstand low oil prices. That's according to the latest report. S&P Global Ratings stated in its latest report that it considers the structural shift in the energy markets now well and truly established, and GCC governments on a path to addressing the fiscal deficits through various forms of expenditure reform. According to officials, this will have both direct and indirect implications for practically all of their issuers in the region. Looking forward, they stated that corporate and infrastructure companies most able to operate successfully and deal with the implications of the reform agenda will be best able to wade out the transformational market changes. They stated that these are likely to be the large GREs with important mandates in the oil and gas, utilities and telecom sectors, as well as private corporate and infrastructure companies that have adopted conservative funding strategies and that are not dependent on subsidies and government handouts. Additionally, S&P's updated economic projections for the GCC reflect aggregate GDP growth of around 2% for 2016 and 2017, similar to growth levels of 2015, while Brent crude will average $45 per barrel in 2017, 50 in 2018 and $55 for 2019 and beyond.